Hey everyone, Anthony Venuto here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about distressed selling, clients walking away from deals, and things that are avoidable moving forward. You don't want to miss it. Stay tuned. If you're watching this video on the Team Sessa YouTube real estate channel, thank you again for all your clicks, all your comments. We appreciate everyone's feedback. Please leave those comments in the comment section below. And don't forget to hit the like, share, and subscribe button. Hit that notification bell so you get notified every time we post a new video. And if you want to book a free consultation to talk about your mortgage or real estate needs, you can do that in the description box below by clicking on the link. And now, back to the video. I am still shocked at the conversations that we're having with, realtors, real estate lawyers, other colleagues and mortgage professionals in my industry, even getting calls from clients who have friends and family in very delicate situations as the market continues to change. Now, a lot of these situations that we're hearing from these professionals were very easily avoidable and preventable, and some of the clients that we hear the stories about should have never been engaged in the market. Now, obviously, there's a lot of Canadians who have purchased in the last few months that are getting stuck in this basic transition as home prices are coming down, qualifications are getting more challenging, and the cost of borrowing is just going up. So obviously, we have the Bank of Canada coming out on July 13th with a conversation of a 75 basis point increase. Let me know in the comment section below what you think is going to happen on July 13th. The U.S. Federal Reserve did increase theirs by 75 basis points. Will we see 75 here in Canada? Let me know. But fixed rate mortgages have now jumped over 5%, meaning that qualification for many Canadians who are looking to get into the mortgage marketplace are going to be a lot more challenging, as we have to qualify them at the current contract rate, which is 5%, plus 7%, making things a lot more challenging. And not to mention all these clients and Canadians that are going to be coming up for mortgage renewal in the next year and might be facing much higher interest rates than what they were previously expecting. So with all these things into consideration, we have a mad dash for clients to either sell, clients who are looking to close on their deals, and we have articles being published by Bloomberg talking about distressed sells and issues with these deals piling up on the lawyers' desks. And I have spoken with a few lawyers, and they have seen a significant uptick in the amount of deal concerns that they have. Now, obviously, speaking with and dealing with a mortgage professional, a real estate professional who have your interest at heart is always the best advice. But obviously, selecting that person can be a little bit more challenging. And I always suggest interviewing, having a conversation with them, researching that person, understand how long they've been in the industry and how much experience they have. Very important, especially in this current marketplace right now. So last week, I got a phone call from a lawyer who had a client who was working with a mortgage broker who had given the client a verbal confirmation over the phone about the amounts and the deal to go out there and purchase. Now, obviously, the broker, the client, did not get or receive any type of formal pre-approval letter. No credit check was issued. No income documents were exchanged. Very difficult scenario. We would never provide that information. We would have a conversation saying, look, we'll get you a pre-approval certificate, which you can present to your realtor, and that will take you out into the marketplace and you can purchase a home at that point. So anyway, the lawyer contacted me, last-ditch effort to try to see if there's anything that we can do because this broker is nowhere to be heard, seen, not getting back to anybody. And now the clients are 2 weeks out from closing and there's other issues involved. So after looking at all the client's documentation and credit, there was no way that we would have ever been able to issue this client a pre-approval to go out there and buy. And now on top of that, they find out that the clients were actually not even Canadian citizens and are now facing a further foreign buyer's tax, of which the clients do not have the sufficient funds to cover, leaving the client fully exposed to a lawsuit if they're not able to close on this transaction. So that is a scenario where obviously, who you're dealing with and what information you are getting from your professional is very important. If you're going out there to get a pre-approval, make sure that your broker is asking you for the proper documentation. It will be intense upfront, because that is what is required in order to get you a pre-approval so that you can go out there and buy. Don't just take their word for it. Get a certificate, get confirmation in email, get something in writing from the professional to confirm that you're good. Because remember, that pre-approval is good for 120 days, pending obviously conditions like appraisal. Now, speaking of appraisals, We had another client contact us from a realtor who had a scenario with their bank. And this was an actually interesting scenario because this could have been easily avoided if the bank representative would have ordered the appraisal in time. Client purchased the home in March, got an approval early March, sent off all the paperwork to the bank representative. Bank representative decided to wait on the appraisal. Now, basically, the home was purchased in March. Appraisal was ordered in June. You guessed it. The appraisal value did not come in, went in $100,000 less. Now, the clients had sold their home because they had to take a little bit of a haircut on the price because they needed to close that deal. They were basically looking to make sure that they can get the bridge. Because remember, for bridge financing, you need a firm purchase and a firm sale. So the clients were left with limited resources after we did all the deductions, after the client looked at their land transfer tax, the real estate commissions, the legal fees, and some of the debts that need to be paid in order for them to qualify. Client needed a 30-year amortization. They couldn't qualify with less than 20% down. And now the clients are faced with a shortfall because of the appraisal and what the agreement was in the contract to give those sellers. So I'll break it down in simple numbers. Client had a purchase price of about $1 million. Appraisal came in at $900,000. Client needed 20%. That's up $200,000 on the million, $180,000 on the $900,000, which is fine. Obviously, that's an easy approval. But the difference was the client didn't have the surplus to pay the sellers the difference of $80,000 because now they have to come up with that difference. They've agreed to it. So in a scenario like this, it was very easy to avoid it. If the bank representative would have just ordered the appraisal in March, I could put my hands on fire and tell you that appraisal would have come in. And if it would have come in a little bit lower, it wouldn't have been $100,000. So basically looking at that scenario in those cases, those are just two examples out of the 15 or 20 calls that are very similar when you're starting to hear appraisals, brokers that are waiting, not ordering the appraisal, fighting between lenders, looking at different options, all these things in consideration. That could have been avoided. The first client who should have never been in the market was easy avoidable. Now, when you're talking about distressed sales, obviously you have clients much like my client, the second client we were talking about, where they needed to sell their home in order to get the bridge financing. A lot of people facing these problems. And these are situations that obviously for some Canadians were unforeseen because as the market turned, you got stuck. And this is why we're saying to clients that are moving forward in this market, if you're planning to go out there and purchase, it's more important now than ever to sell your house first, especially if you don't have the funds to back you up or you have a mortgage on the property. So understanding your ins and outs, speaking with your mortgage professional about your solutions and options available, what's available for you on the A banking space, the equity space, which are the B banks and equity lenders, and ultimately if you need a private mortgage in order to make sure that these deals close and you avoid litigation and lawsuits. A lot of times nobody wants to go through court, especially with the delays happening right now. We're seeing court delays anywhere from 2 to 3 years, and nobody wants to go through that. Most people just want to move on with their lives. So what I want to do is leave the video here. Hopefully we're giving you some food for thought and had a conversation about some of the avoidable issues that you can see in the market right now and what you can do to avoid them. So we hope everyone enjoyed the video. Have a great Friday, an even better weekend ahead. Until next week, stay tuned and thanks for watching.